Here's the trend of what's happened for corporations over the last several years and some of the planning opportunities that remain for corporations. So back January 1st of 2018, the Government of Canada introduced changes to split income. They introduced the TOSI rules, so tax on split income. What used to happen prior to this is you could add a child or a spouse to a corporation and you could split the income coming out of the corporation. It was a huge impact to those who had corporations. Next, January 1st of 2019, the government decided to implement changes to the passive income rules. So prior to this date, you can earn as much passive income as you wanted within your corporation, and there was no impact. After this date, what the government did is they said, if you're earning too much passive income within your corporation, we are going to penalize you. So what the rules are is once you reach $50,000 of passive income, for each additional dollar above that $50,000, you will have a $5 clawback to the small business deduction limit. Again, the small business deduction limit is the tax you pay, the low tax you pay on the first $500,000 of active business income, $600,000 in Saskatchewan. So once you reach $150,000 of passive income within your corporation, you will no longer have any small business deduction limit, and you will pay tax on your active business income at the higher rate. Therefore, no benefit or tax savings to corporations. So June 25th, 2024 is the introduction of the changes to the capital gains tax. So prior to these changes, if you had capital gains income within your corporation, half of it would be taxed and half of it would be credited to your capital dividend account. After this date, 2/3 of the income is going to be taxed in the corporation, and therefore the outcome of this will be higher tax to your corporation, more clawback to your small business deduction because your passive income's higher, and a smaller credit to your CDA account, your capital dividend account. All in all, the trend we're seeing here with the government is that they are changing the rules and the strategies for corporations. There still are some strategies that we can focus on that you should be aware of within your corporation. We won't get into detail. We will be posting individual videos with regards to the different strategies, but some things that you should be considering are corporate class investments, capital gains stripping, although this will change and not be as beneficial after the June 25th, 2024 rules and will be very specific per individuals. Flow-through planning within your corporation, high cash value insurance policies, estate freezes are still in effect and should be considered, corporate asset meltdown. So there's definitely a trend for corporations to be paying more tax. The government does not want you to earn and hold a lot of cash within your corporation. And therefore, the strategies that remain and the tax ideas that remain should be considered going forward.